Hello, everyone, and welcome to another episode of Rethink, Reconfigure, Restart. Today, I want to discuss about the impact of the current scenario, the current global ecosystem, the economy on our financial services industry. The financial services industry is, to my mind, the engine which keeps the economy running. So obviously, they are very interlinked to discuss the issues around it, to discuss the impact on the borrowing community, to discuss the impact on other sectors because of the stress in the financial services industry. How do we rethink risk? How do we reconfigure lending? I have my colleague with me, Sreedhar Vegesna. Sri, let me start by really understanding how this pandemic environment and the consequent regime of low rates and frankly a hyperactive equities market is playing out. How are the financial institutions rethinking risk in such a situation?
Uncharted territory is the best I could say as far as the times we're in. So, Deepankar, the way to look at risk now is really to think about not the past data, but how do I predict future data? So, leveraging sector expertise becomes very, very important. You have to be able to break down the risk at a sectorial level. Second, real-time transactional data, accessing that data from clients is a great way to be able to leverage insights as to how the business is performing. It's no longer a quarterly question. You have to understand on a weekly basis how the business is faring and how things are changing. Lastly, macroeconomics and being at the pulse of how the economics are changing is very important. In the past, you used to look at things and economics used to change very, very infrequently. But now with lockdowns, change in lockdowns, all of these things are a constant change. And understanding macroeconomics as a risk manager becomes very important.
Thank you, Sri, for that. I can absolutely relate to the point around future data. We actually have a term for it called synthetic data. The idea is how can data be predicted and created as if it has happened now, and then you react to it. The next point, which I really want to take up on, is how is the geopolitical situation and the pandemic impacting the banks because of the limitation or the challenges which their borrowers are facing. So, for example, how can banks support the borrowers manage their supply chain risks?
The bunker banks can do quite a bit. There's some great products like supply chain financing, hedging, currency management. All of these are necessary components during this time. And helping clients to understand how to leverage these products becomes very important. Second part is really working on the collaboration across their clients. A lot of domestic clients can take advantage of other domestic producers to improve the supply chain. And then lastly, financing transition, right? So financing, when you have two different suppliers during this time, you need additional financing. So these are some elements that can be put out by the client, by the banks.
Thank you very much for that, Sri. Shifting gears, I just wanted to talk about how financial institutions are refiguring their capital structures. As you work with a number of global private equity players or global investors, how are they looking at this sector about the banks and the NBFCs and what is important to them?
There's lots of interest in the marketplace in the financial institutions in India, Deepankar. By far, this is a very, very good time for banks or other financial institutions to look at a broader investor base. Governance becomes the biggest criteria by which the institutions are judged. And investors are willing to look at a lower rate of return for strong governance. So I think the focus for anyone looking to recapitalize or restructure their capital should think about the governance aspect. Plus, there's also lots of interest in stressed assets in the marketplace. And that also lends itself as a great opportunity for companies.
Absolutely, Sri. Governance is the cornerstone, and that is one point which always comes up for discussions in my conversations with clients. The next point which I want to talk about is how are banks and NBFCs increasing or talking about their market share? How are they connecting to their customers? Are there digital solutions which they are leveraging to restart?
Contactless servicing and digital acquisition are the terms that are being used right now, Deepankar. There's a lot of interest in acquiring customers through digital lending. There are capabilities in the marketplace that facilitate this. Clearly, there's processes that need to be modified in order to enable this. There are hurdles in the way that we do customer verification, there are hurdles in regulations, but all of these are being overcome by various institutions. And this is a great opportunity. Just pick one example of the digital lending as an example of change in business models that financial institutions are employing to increase their customer base and continue to grow during this time. So, Deepankar, you see the marketplace even broader than what I see as the advisory leader for the firm. What are you seeing as far as the market? What's your assessment of the marketplace? And how can financial institutions support the recovery?
Yes, Sri. The concerns of our clients across sectors are still around the three key themes: how we increase our revenues, how do we manage costs, how do we navigate risk in this changing environment. For me, the way I see the market, there are 4 to 5 factors which impact every organization, and the financial system or the financial institutions can really help their customers. First is that private sector investment will remain muted. So the government is going to pump prime the economy, or they should be pump priming the economy. What's the impact of that? Second is that the import and the export will remain muted too. So how will that play itself out? The third one is around how the currency markets will move, and as you had alluded to it earlier, and helping customers navigate through that part of the ecosystem is another key area. The economy, if you recall, was already in a slowdown before COVID hit us. So, for example, auto sales today in September are pretty much at the same levels as in February in this year. However, February 20 sales were much lower than February 19 sales. So, whilst we may hit pre COVID levels soon, but is that enough? Time will tell. I think so. There is a way to go for all of us. That was a very interesting conversation, Sri, and thank you very much for it. Every crisis brings in challenges, but also opportunities. The opportunities to rethink, reconfigure, and restart is always there for us and for our organizations. Dear viewers, thank you very much for watching this episode. Next week, we'll get another topic, another view from one of our colleagues or clients. Till then, stay safe, stay healthy.